Good morning, traders. Welcome to my channel, Smart Index Edge. I'm Nalnakshi Swami here, explaining you one of the most popular strategy. Intraday strategy is a reversal strategy. So everybody wants to, usually intraday, while doing intraday trading, traders wait for the reversals to take either long position or the short position in intraday. So for this strategy, you need to identify potential key support and resistance levels. That is very, very important because they are the turning points. If the instrument becomes overbought, then it is tend to reverse on the intraday itself. You can take advantage of that and you can cash in some money. Like that, if the instrument starts reversing from the support level, you can go long and even cash in some money. And even the option traders also, they can enter put option and call option. See, many big players will have a lot of money. It needs a lot of money for selling the options. For the retail traders, they have minimum amount of money. They look for buying the options. Either it is a call option or a put option. So if they know potential key support and resistance levels, then it will be very easy for them to take the trade. And for this third thing is to implement, you need set of for popular reversal patterns. Popular reversal patterns are nothing but like candlestick patterns or chart patterns people use for that. For example, here you can see wedge type of formation. For example, let me take a tool. Yeah, it's a wedge, narrow, constriction. So constriction and breakout. This type of pattern they will see. And also they will see for a single candlestick pattern like a reversal dozy and shooting star, like that. From the bottom, you can see from the support for like hammers and all those things. These are the popular reversal candlestick patterns and also chart patterns for the reversal trade. And also you need to identify the overall. For example, if the wedge is forming in the context of here, price has formed and it has come to for example, you think it as a support, 83.45. I'm taking a stop and a wedge is formed around here, you can look for breakout to the upside. Another way is you have to see by using moving averages. See here, you can take 20 period moving averages and 200 period moving average. Price fallen below the 20 period moving average as well as the 200 period moving average, and it started consolidating. When it starts consolidating, you need to wait. Actually, you need to apply your logic. What is happening over here is accumulation. When the accumulation is taking place, you can see for the patterns or the candlestick reversal things and look for when price starts pushing above pushing above this area with a big candle and volume build up, you can go long in the intraday strategy. So likewise, even you can identify even before the breakout also, you can identify by trend structures, trend lines and all those things. And another indicator, momentum indicators also you can use for RSI and stochastics. For example, if I apply RSI over here on this chart, relative strength index. See, you can see the price is price has come, it was oversold. And also when it, same level it is coming, after hitting one level, it is coming over here to the same level. You can see divergence also. Divergence in the shift in momentum, because RSI is a indicator which calculates the momentum look back period of the 14 periods. So it calculates the average price of the 14 period look back, and it calculates the price fall and gain and averages it out, and it gives the indicator shows. When there is a divergence in the indicator RSI, when the fall is here and it is making a higher low on the RSI, then it confirms that it is acting as a support. You can look for a reversal pattern on this here also. But for while see hindsight, this looks very easy, and I can also explain. But in the live market, it becomes very difficult for any layman to take decisions. See, and I am going to explain you one of the very popular popular indicator, which is not very commonly used, that is regression channels. Regression channel you can apply. It is available in the toolbox. Anybody can apply. It is available somewhere here, I believe. You can search on the toolbox, but I've made it as a favorite and I'm showing it to you. See, in this type of data, you are not able to find your proper central point. If the price is going like this, climbing up, it's difficult. It's an angular form. It's going in an angle. So then you can use the regression channel. Say, I'm taking this channel from the support to the resistance. I'm applying it. So what it does is regression channel is a channel which it calculates by the least square method. So this is a very popular. What this central line is the middle point of the data. It collects all the data, scattered data. Say price has been scattered over here, upside and downside, you will get a median. And you can construct a channel based on that. Take a parallel channel from here as a base, you drag it to this. So this is not a correct way, or you can take the parallel channel like this, measure it, and you just make a cloning of it. Okay. So like this, you can find supports also. Support in the market. This is another, say, this is 2 standard deviation. So when it comes like this, you can guess if you are seeing a reversal pattern on this area or accumulation on this area, which type of pattern is forming on this area based on the moving averages and all those things, you can decide. This is a reversal. And one more thing, in a trading view, somebody very, actually, it is an open script. He has provided a very good or a regression channel. I'll show it to you on the indicator section. If you click on the indicator section, no, sorry, that is not the indicator. Okay, this one I think. Indicators. If you type regression, linear regression channel / curve slow by digit, DG trend. This person has amazingly coded for this. So if you apply, I'm applying this regression channel already. It is in my favorite, I believe. No, otherwise I'll take it again. Regression channel, I'm typing it. Linear regression channel. Note down this. by DGTRD. You have to take this. Okay, I'm applying this. When I apply this, so let me make it a candlestick pattern. This, let me remove this drawing so that you will be clear. See, when the price is scattered like this, see, this red line indicates the median line. That is the median line. It has taken the median line. And for this channel, this is the median line. Yellow color is the median. So if you are on the, so this is 2 standard deviation. When the price approaches this 2 standard deviation, then it becomes an overbought. And correspondingly, you are seeing overbought condition on the RSI. Here, see, when the price was here, then that is the problem with the RSI. In a, it is showing, overbought condition, it becomes very hard for you to take decision. It's not a simple thing. So that's why traders do mistake by using RSI. This is, I'll remove the RSI, or I'll collapse this pane and reset my chart. See, it's so simple. See, price started moving. It is a, I was talking about wedge type of pattern. Price came over here. This is the median line, and price started consolidating in this. So it acted as a, this standard line deviation line, 2 standard deviation, it is acting as a support, and price is consolidating above the moving average. Can you see over here? It is consolidating above the moving average. Price started coming above the, you can see big candles. And also he has coded for the candles also. See, these are volume bars. So green colored big bars you can see over there. So you cannot see in the live market, immediately you cannot concentrate on that. So when you see these type of bars, and also it went through consolidation. It went through consolidation, that will be a confusion for you, and it acts as a guideline for you to take the trade. See, when price hit the 94.95, the price of BHEL, it became overbought because of the 2 standard deviation. Price will not sustain above that. There you can see, when you see around 2 standard deviation, when the price is overbought, and when you are seeing the reversal candlesticks, you can see reversal candlesticks, right? Price has gone over here, volume, you can see decrease in the volume, divergence in the volume when the price is moving, and the next is color change. Color change is the price, color change is immediately indicates price is closing below the open, and also some sort of pin bar you are seeing. When you see the follow through, you can combine all the data with this one, with the candlestick patterns, with the regression channel, 2 standard deviation, and you can do that. See, I'll enable the Bollinger Band also. Bollinger Band is constructed basis on the standard deviation. If I enable the Bollinger Band, see, median line is, you can make a strategy only up to this. When price starts moving below this Bollinger Band, you will not be unable to make out the where is the level I need to book out my profits. See, if I hide the Bollinger Band, when the price comes to the median line, this is the median line. See, this is the by least square method, price, it has calculated the median line over here. So when the red line, when price starts coming to the red line, before coming itself, these regression channel, you can anticipate reversals. You can anticipate reversals beforehand itself, and you can be prepared for booking your profits. That is one advantage. And also, if you want to take a reversal trade from this area, you are seeing a reversal candlestick pattern around the hammer over here, and you can anticipate for the targets also. Because it is fallen from here, you can anticipate for the one standard deviation retracement or retracement to this level. This is how you can use. This is a novice method. This is very, very helpful for a trader to identify the support and resistance in combination with all the indicators and price patterns. Like you can use RSI and all those things, but RSI becomes little bit confusing when you go for taking the trade, because sometimes it will not give you clear signals. But you can identify overbought and oversold conditions by using stochastics and RSI, but they have got some limitations. And this is the best method, because this method, this linear regression channel, is created by using taking the least square method. That is, when the data is scattered, it calculates and it plots a median line. For example, leave it actually. Even you can argue, you can take it with a fib also, you can do that. See, if you take the fib from here, you will get a median line. Uh, 0.5 is the median line for this pivot point. See, I'm taking here I'm applying the fib tool from here to here, and this midpoint is coming over here. And whereas for the data, the whole data, it is taking the whole data and it is plotting the midpoint. So you will have more confidence in taking the trade. So and taking as a median line it is in an angular way. It is calculating. So this is the best method actually. Even you can use filter like FIP tools, and also there are even pivots also. Probably everybody knows about the pivots standards. If you use the pivot point standard, that tool also you can see, this is the pivot over here. See, pivot is very low. So you tend to make very wrong decision. See, you cannot take the trade when there is a pivot. When see, you are thinking it has to come to the pivot. See, it has stopped around R1. You cannot make decision. It has gone to R3. Sometimes it will go to R2 only. How will you take the trade? See, it confuses actually. So for elimination, for precise trading, you can use all the filters and you can see one by one, you can filter it, and also you can do that. See, once you have decided, you can take the trade very efficiently. This is the reversal strategy, is a popular method you can utilize along with the moving averages and all those things. Best indicator what you can use is the linear regression channel. If you are not having a paid subscription, also you can use one or two indicators, then you can remove it and you can filter it out. Like this, you can make a very good strategy on the reversal trading. Hope this will help you, traders, to take an efficient trade. Before closing that, let me show you what is happening in the index. Let me type the indices. Let me remove these pivots so that they are cluttering the chart. Okay, I'm keeping only a regression channel as my tool to see where are the supports. And let us go to the indices over here. I'm applying the Nifty chart. See, you can clearly see it became overbought around one standard deviation. This is 30 minutes time frame. If I go to the daily time frame, it is very, very overbought. Two standard deviation. That's why it started coming down. And you can see, you can be alerted actually. Even the candlestick pattern sometimes a bit confusing. See, you are seeing hammers and the price moved above, and when it started getting rejected from here, it started coming out. And if I change the time frame to intraday time frame, you can clearly say price started coming below the median line, it started showing weakness, and it is showing some sort of support over here. You can see a pin bar over here. While closing, you have seen a pin bar over here. And for tomorrow or coming days, if it starts correcting from this level will act as a 19,144 will act as a support for the based on the channel. And also 200 period moving average is placed around 18,993. You will in advance, you can prepare for the levels on the Nifty. If somebody comes on the channel and if they tell about the support and resistance, you can also find the levels, and you can also get prepared in advance for the levels to trade. Okay, friends, thank you very much. Nalinakshi Swami signing.